So for those that missed the news, Iran officially adopted Bitcoin. They launched a Bitcoin-based insurance for Hormuz. If you want your ship to get through, more or less, you just give them some Bitcoin. And this is, to me, this is crazy. And I put this slide together. The trend towards Bitcoin as the new world reserve currency. You got El Salvador adopting it as legal tender. After that, Russia legalized it for cross-border trade. Then you have an official adoption of Bitcoin under the U.S. Strategic Reserve. Then you have state-level reserve legislation. So independent states within the United States have reserve legislation now adopted. And now, in the middle of war, global conflict, energy markets, global trade, you have Iran adopting Bitcoin not only as a store of value, but as a medium of exchange for Hormuz settlement.
For years, Bitcoin adoption stories mostly came from retail investors, tech companies, or small nations experimenting on the edge of the financial system. But what we're witnessing right now feels fundamentally different. This time, the conversation isn't about speculation or hype cycles anymore. It's about geopolitics, sanctions, global trade, energy markets, and nations trying to survive in a rapidly changing monetary order. And whether you agree with Jack Mallers or not, the fact that Bitcoin is now being discussed alongside strategic shipping routes, sovereign reserves, and international settlement systems tells you just how far this asset has come. Over the past few years, the dominoes have slowly started falling into place. First, you had El Salvador making Bitcoin legal tender. Then came Russia exploring crypto for cross-border trade after being cut off from parts of the Western financial system. In the United States, the conversation escalated even further with strategic Bitcoin reserve discussions, state-level reserve legislation, and a growing push toward integrating digital assets into mainstream finance. At the same time, Wall Street giants, major banks, and institutional players have been aggressively expanding into crypto, hiring for digital asset divisions and launching products aimed at gaining exposure to the space. Now, the focus has shifted toward one of the most strategically important regions on Earth, the Strait of Hormuz. Roughly 20% of the world's oil trade passes through this narrow waterway, making it one of the most critical shipping routes in global commerce. Reports from regional media claim Iran is developing a crypto-powered maritime insurance platform called Hormuz Safe, a system that would allow ships to pay insurance premiums using Bitcoin and other cryptocurrencies while bypassing traditional systems like SWIFT and Western sanctions. If true, this would represent something much larger than another adoption headline. It would mean Bitcoin is increasingly being viewed not just as a speculative asset or store of value, but as neutral infrastructure for global trade itself. In today's video, we're going to break down why Jack Mallers believes the recent Bitcoin sell-off could actually be part of a much bigger macro transition, why sovereign adoption may matter more than short-term price action, and why some analysts think we're still in the very early chapters of Bitcoin's next major move. And trust me, the second half of this video gets even crazier once we get into Iran, global trade, and the future of the dollar system. If you enjoy content like this, make sure to like the video, subscribe to the channel, and turn on post notifications so you never miss another update. Now let's get into it.
Bitcoin's going to get hammered here. And it's obvious. You should understand why. When these yields go soaring up and the bond market experiences volatility, everything sells off, gold included. People got to raise cash. Mind you, there are countries around the world that are currently raising cash, probably selling bonds, because they're going to have to subsidize their country and their citizens' oil consumption, energy consumption, food. Would you rather own a bunch of bonds and have your people starve, or feed your people and own less bonds? It's obvious. It's no debate. And that goes for corporations. That goes for people. Raising cash, you sell what you can, not what you want. Bitcoin is the most sellable global liquid good there is in the world. So make no mistake, Bitcoin, there's going to be volatility. It's going to get punched in the mouth here. But this is the transition from fiat to a prosperous future. So just buckle up, stay humble, stack sats. Reduce the consumption that you have. Reduce your spending. Find a way to increase your income if you can. This is a perfect time to turn on those DCAs. I've been saying it this entire 2026. Going to be volatile. Catch some of these dips. Strike, we've got no fee DCA, free withdrawals to cold storage. Get those sats on ice. Okay? I kind of just mentioned this, but this is what pain before print looks like. So Bitcoin and gold, when you see these things sell off together, that means the dollar is probably ripping. The dollar is probably ripping and getting stronger because U.S. yields are going up. People are meeting margin calls. Sovereigns are raising capital because there is an energy crisis. Think of Bitcoin and gold or hard money, these saleable 24/7 liquid markets, as like the ATMs for the world. Like whenever they need cash, they go to these things. Okay, that's why they react first. That's why they're usually leading in market environments like this. And that's why they're selling off. And again, this to me is what winning looks like. This is the early chapters of what a $500,000 Bitcoin is. Bond markets are going to fall apart. Inflation is going to rip everyone's head off. They're going to have to print money. And this is, if you're a Bitcoiner, you got to just hang on tight, okay? And I thought this point was interesting as well. It's unclear to me that we ever had a real bull market. So as the economy starts to heat up, so with hot inflation is hot economic data, the economy is starting to really warm up. Now, it's not there quite yet, but you can see Bitcoin's correlation to strong economy. And I'm looking at PMI in particular. And PMI right now is at 52. This article, so I'll read straight from the article. This is from Ansel Linder. He wrote, below is an image that I sent out on Twitter. I've talked about the fact that 2023 to 2025 might not have been an actual bull market at all. PMI being in contraction speaks to that possibility. If that's the case, PMI is expanding right now, so that should mean price has a tailwind to go higher. I believe this. If you look at Bitcoin in gold terms, 2023 to 2025 wasn't a bull market. We reached our previous all-time high, but we never really made a smashing new all-time high. So I don't think that the last quote-unquote bull market was real. I've been in Bitcoin for almost 14 years at this point. This is nothing like the bull market post-COVID. This was nothing like the bull market experienced in 2017. So I believe this to be true. I got my eyes on PMI. And again, I think as they print money, as they continue to try and finance the U.S. government at the short end, as these large, massive companies roll their cash flows and raise money to pour into the real economy as opposed to equity buybacks, I think the economy will heat up. I think Bitcoin's going to go to the moon.
According to MILLIONAIRES, moments like this are precisely what the transition away from fiat systems is supposed to look like. Because when bond yields spike, liquidity dries up, and governments scramble for cash during periods of economic stress, everything gets sold. And honestly, that's exactly what we've been seeing play out over the last several days. Right after the Clarity Act advanced toward a full Senate vote, Bitcoin suffered a brutal sell the news reaction. Bitcoin dropped roughly $6,000, wiping out over $126 billion in market capitalization. Ethereum fell more than 10%, erasing another $30 billion from the market. The broader crypto market lost nearly $190 billion in just 5 days. On top of that, Bitcoin spot ETFs recorded massive outflows, including a staggering $648 million single-day withdrawal, the largest outflow since January, while Ethereum ETFs also saw tens of millions pulled out. Now, for newer investors watching this market, moments like these can feel confusing. After all, wasn't regulatory clarity supposed to be bullish? Wasn't institutional adoption supposed to stabilize the market? But this is where Maller's perspective becomes important. He argues that in times of global uncertainty, Bitcoin behaves like the most liquid, most sellable asset on Earth. When countries, corporations, funds, or traders need immediate cash, they sell what they can sell quickly. And Bitcoin trades 24/7 globally with deep liquidity. In his words, Bitcoin and gold effectively become the ATMs of the world during periods of financial stress. And whether you fully agree with that outlook or not, it's hard to ignore how rapidly the broader adoption story continues evolving beneath the volatility. While traders focus on daily candles and ETF flows, governments and institutions appear to be playing a completely different game entirely. Let's get back to the video.
Iran adopting Bitcoin in maybe the biggest way in Bitcoin's history ever. So for those that missed the news, Iran officially adopted Bitcoin. They launched a Bitcoin-based insurance for Hormuz. If you want your ship to get through, more or less, you just give them some Bitcoin. And this is, to me, this is crazy. And I put this slide together. The trend towards Bitcoin as the new world reserve currency. You got El Salvador adopting it as legal tender. After that, Russia legalized it for cross-border trade. Then you have an official adoption of Bitcoin under the U.S. Strategic Reserve. Then you have state-level reserve legislation. So independent states within the United States have reserve legislation now adopted. And now, in the middle of war, global conflict, energy markets, global trade, you have Iran adopting Bitcoin not only as a store of value, but as a medium of exchange for Hormuz settlement. This is what Bitcoin as the global world reserve currency actually looks like. Bitcoin is for the sanctioned, it's for the small, it's for the strategic, it's for all, it's for everybody. Money that even enemies can use. And this, again, this might be Bitcoin's biggest adoption moment. And Bitcoin does this. You know, I remember getting into Bitcoin and like some company partnered with PayPal, and it was more a press release than any actual product. It was a bunch of fluff and hype. But at the time, we were just dying for any outside validation that our crazy idea that this was actually the best money in mankind, we were just dying for external validation. And so we would go nuts when like PayPal partnered with BitPay to do something. None of it actually ever came out. None of it made any sense. All of it was stupid, but we would go nuts. And it's funny just like how people value external validation, validation at all. Whereas something like Iran using Bitcoin for settlement during a war for 20% of the world's oil supply to pass through one of the most like sensitive and critical passages for global supply chains and energy consumption as we know it, people are like, meh. It's just funny how that works. It doesn't get bigger than this. Why? Iran needs to trade and use money with anybody. People they trust, people they don't trust. People that love them, people that are threatening to drop a nuke on their head. Because money is akin to water for a functioning society. It is a necessity. It is a technology we invented to solve for barter and scale human interaction. It is not that you don't have the option to be like, I'm not a big fan of money. It's not like, I don't like soda. I'm going to stick with water. I don't like money. I'm going to stick with barter. That's not an option. We need money. It's like water. We will die without it. And so Iran electing Bitcoin as the money to use, knowing that everyone is trying to censor them, sanction them, and kill them, but they still need money because they still operate in a market like we all do. They still get up and have time and energy to expend, and they need to trade that so they can consume energy like calories to survive. They chose Bitcoin. They didn't choose gold. They didn't choose the dollar. They didn't choose stable coins. They chose Bitcoin. Why? Because at the end of the day, the best money wins. That's why. Bitcoin's scarcer. It's more divisible. It's easier to transport. It's cheaper to store. It's cheaper to receive. It's more sellable. It's more liquid. All of it. Pound for pound, the best money. Yeah, central banks are hoarding gold right now and buying up gold. Yeah, sure, NVIDIA has outperformed Bitcoin over the last 2 months. I'm telling you, pound for pound, according to throughout human history, what makes money good? What's the best form of monetary technology? Bitcoin kicks every other money's ass, and it's not even close. Want an example? Iran.
That broader adoption story becomes even more fascinating when you look at what's happening globally right now. On one hand, you have governments exploring Bitcoin as strategic infrastructure. On the other hand, you have nations quietly managing enormous sovereign Bitcoin reserves behind the scenes. And one of the most surprising recent developments involves Bhutan. According to blockchain analytics firm Arkham Intelligence, wallets associated with Bhutan appear to have moved more than $1 billion worth of Bitcoin over the past year, potentially reducing the country's holdings from around 13,000 Bitcoin to roughly 3,100 Bitcoin. But interestingly, Bhutan's sovereign investment arm reportedly disputes claims that it sold those coins. Officials have denied offloading Bitcoin, despite years of wallet tracking data that many analysts previously accepted as accurate. And that uncertainty raises huge questions about how sovereign nations are managing Bitcoin reserves behind closed doors, especially as countries increasingly recognize Bitcoin as a strategic asset. At the same time, the regulatory environment inside the United States also continues shifting in crypto's favor. In another major development, the SEC officially ended a policy dating back to 1972 that often prevented settling defendants from publicly denying the agency's allegations. For crypto firms, that could represent a very significant change moving forward, especially considering how many companies previously settled cases while still being forced to remain silent publicly. Little by little, the environment around digital assets continues evolving, both politically and financially. And this is why the bigger conversation around Bitcoin has changed so dramatically. We're no longer just talking about retail traders buying dips or meme-driven speculation. We're talking about sovereign reserves, ETF flows, energy markets, sanctions, cross-border settlement systems, and the gradual emergence of Bitcoin as a neutral monetary network that different nations, even geopolitical rivals, can all interact with. That doesn't mean the road ahead will be smooth. As Mallers himself said, volatility is likely part of the process. But for long-term believers, these chaotic moments may eventually be remembered as the early stages of a much larger monetary transition already unfolding in real time. But as always, I want to hear from you guys. Do you think Bitcoin is genuinely evolving into a global reserve asset, or do you think the market is still getting way ahead of itself? And what do you make of Iran, Bhutan, and the growing sovereign adoption narrative we're starting to see emerge? Drop your thoughts down in the comments below. If you enjoyed the video, make sure to like, subscribe, and turn on post notifications for more updates just like this. And as always, thanks for watching.